For those who've been trading, know that there's something going on with the Japanese yen, and there's not a lot of YouTubers who have been talking about this. Luckily, your boy got your back. So in order to know what's going on, you have to know the history. And once you understand Japanese history regarding their monetary policy, then you will understand what may possibly happen. The yen has not been following technical analysis. It has not been following price action. But I'm going to show you when to trade it when you can rack up thousands of pips. Just as fast as it's falling, it's going to rise, I guarantee you. So watch the video all the way to the end. By the way, I want you to like, subscribe, and comment because I definitely believe you're going to be commenting once the Japanese yen begin to rise again right after this. All right, so again, what's going on with the Japanese yen? I'm going to try to break it down as simple as possible. You know, their GDP is still below pre-pandemic levels. They're trying to grow their economy. And in order to do that, they have to have very, very low interest rates. That's a policy that they've been having. Their 10-year yield has been really, really good. And they've been keeping this up for a long time. That's just how they work in Japan. So their interest rates is the third lowest in the entire world. Out of all the countries in the world, theirs is the third lowest. And that's why they've been successful. However, they're trying to build their economy back again. And in order to do that, they have to maintain their interest rates. And as their interest rates are being maintained at that low rate, it's causing their yen to drop. And the reason why is because everywhere around the world has been increasing their interest rates so that they can begin to grow their economy again. As the interest rates begin to grow, the country's currency began to increase in value. And the opposite is true as well. The Japanese has not changed their interest rate. It's still very, very low. And that's why their yen is dropping in value. So as their interest rates are low, a lot of people are still borrowing. They're buying homes, they're buying cars, they're using all of their credit in order to maintain the flow of the yen throughout the country. And it makes absolute sense. But because of that, the yen is dropping. Now, the yen is only dropping because everywhere else in the world has increased their interest rates and their government's country is increasing. Let's take the United States, for example. The interest rates has increased and therefore the dollar is increased. Not as many people is borrowing as before, and therefore the dollar is increasing as well. So that's why we trade currency pairs when we're trading Forex. There's always one currency versus another. And that's how you determine the strength and the weakness of a country by comparing it to another one. And the US dollar is the leading dollar of the world, which is why we compare the United States dollar versus the Japanese yen. And we're going to take a look at the charts really quick. But when you go to the USD and the yen chart, you will see a high increase because the USD is the base, but the Japanese yen is falling in value. And throughout my research, there's only two ways that the Japanese yen can catch up and gain value again. Number one, the BOJ. The BOJ stands for the Bank of Japan. They have to actually pass some monetary policies in order for the yen to increase, but they're not looking at doing so anytime soon. And then number two, the Japanese government has to step in. Last time the Japanese government stepped in was back in 1998, and they paired with the United States, and then they start going on a buying spree with the Japanese yen, which caused the yen to increase in value. So either of those can happen. So I'm going to show you when the Japanese yen is going to start increasing in value because it's going to jump up really quickly once this happens, just as quickly as it has fell. And then I'm also going to show you how to trade it right now. All right, so I'm looking at tradingeconomics.com here, and we can see that Japan is number 3 in the entire world as far as the interest rate. They're at minus 0.1%. And if you go through and you can find the United States down here at 0.5%. Okay, so this is why they want to maintain this. This is a monetary policy that they've maintained for so long, is to keep their interest rates really, really low. And when you keep your interest rates really low, specifically the same, then your local currency will decrease in value when everyone else is going up. Okay, so we can look at previously where we can see a lot of different countries have been at zero, but as we scroll, we see how it increased. Like in Israel, it was at 0.1 and it began to increase, and so on and so forth. We see that Hong Kong was at 0.5 and then it began to increase. The United States was at 0.5 and it began to increase. And as you go through the list, you can see it increasing. Japan is one country that hasn't increased their interest rates. We can look at Swiss franc versus the United States dollar, and you can see that there is a fall in the Swiss franc as well because we're comparing two currencies. That's why we compare the United States dollar versus another currency, so we can balance the strength and the weakness between the two. So let's look at some charts. All right, so we're on the United States dollar and the Japanese yen on the daily, and it doesn't take a genius to see that we're in an uptrend here. a steep uptrend. So the higher, the steeper it gets within a specific time, the faster it's going. So we see that there has been an increase in the United States dollar. And the reason why we see it going up, the first currency here is the base. The second currency on the right is the quote. So whatever the first currency is, in this case, it's the United States dollar, that's the chart we're looking at. So the United States dollar is increasing compared to the Japanese yen. And on the contrary, reversed, the Japanese yen is decreasing, okay? So the value of the United States dollar has increased against the Japanese yen, meaning that the United States dollar is worth more than the Japanese yen, okay? But there is a fall coming, guys. I guarantee you there's a fall coming. It can't happen forever. And just as fast as something falls, it's going to go the opposite way. So let's look at a few more yen charts and get a better understanding. And then I'm going to show you how you can trade this in the future and what to look out for. All right, now I'm with the Great Britain pound and the Japanese yen. Look at this steep hill right here, right? How many pips is this? So I'm going to grab it from here, which was March 9th, all the way to where it currently is, or just say the highest peak, which was 1,663 pips, which is ridiculous. Actually, 1,720 pips. So let's go back to the United States dollar and the Japanese yen here, and look how high it was. I'm going to go to the weekly chart, and let's see when the last time price was at this area here. And this will give you an idea of what happened, right? So back then, when price was this low for the Japanese yen, was May 2002. This is a 12-year gap here since price has been here. And you can see on the right, on the left side, just as fast as price has gone up, it dropped, okay? So this is a good time to be a position trader if you want to do that and if your account allows you to do that. Remember, risk no more than 2% of your account when you trade. That's what we teach in our academy. So let me tell you what you need to look out for when you are trading the buy for Japanese yen. If you're trading against the US dollar and the Japanese yen, you want to sell, okay? But in actuality, the Japanese yen is increasing in value. So let's take a look. All right, so here is forexfactory.com. This is what Kenya and I like to look at when we're looking at news that pertains to currency and how things may move, okay? Like I said in the beginning, your price action isn't going to work. Technical analysis isn't going to work. Your favorite strategy isn't going to work. And that's why a lot of people don't talk about this, because it's not working. A lot of people has lost money because those strategies aren't working. That's why it's really important to stay up on these news before you trade. You open up your news, you look for red folders like this every single time before you enter any single trade. We want to be as honest and as candid to you as possible. So what I did was turn to April 27th. Today is April 22nd. By the time I upload this video, maybe a day or two after that. However, I fast forwarded to April 27th because this is what I want you to look out for. I want you to look for a red folder for the Japanese yen, and you want to specifically look for BOJ. BOJ stands for Bank of Japan. Like I said, they're one of the movers who can actually change this trend of the Japanese yen, okay? So this is tentative because they don't have a specific time yet, but I want you to look out for this. I'm going to click on the folder here. So why do traders care? It provides valuable insight into the bank's view of economic conditions and inflation, the key factors that will shape the future of monetary policy. This can change the yen right away. And if you're following technical analysis or price action right now, and you didn't see this red folder and you didn't go to forexfactory.com or wherever you get your international news for things like this, then you're going to trade the wrong way. Okay. So when this comes out, be aware and look at it and see if it's going to change the trend. You want to look to see if the Bank of Japan is on board to increasing interest rates, because they need to increase interest rates in order for their Japanese yen to increase in value. That's when you want to sell the United States dollar versus the Japanese yen, or any other pair versus the Japanese yen, okay? If a pair begins with Japanese yen, that's when you want to buy. So on the base side, on the left side, you want to hit buy if the Japanese yen is the first pair. But if it's the second pair, like I said before, the United States dollar and the Japanese yen, because it follows the second pair, which is the quote, then you want to sell. All right, so if you plan on trading right now until we hear that news to sell the USD JPY, you will continue to buy. And I know it sounds weird because we're at an all-time high since 2002, but you want to continue to buy because it's not going to change until the Japanese government and the US government decide something together, or the BOJ decide something. And that's when we'll go to Forex Factory to find out when that'll happen. But you'll continue to buy because it's going to continue to go up. It is not respecting technical analysis, and it's not respecting price action. So if you want to learn more about this, I advise you guys to comment, reach out to us, join our Telegram where we send free trade ideas. And if you need your hand held with more specifics like this, because we talk about this in our school, I encourage you to join our academy, which is all in the description below at bkforexacademy.com. I want you to comment because once this happens, I want to see who got on this train for a long-term sell. I'm telling you guys can make hundreds, if not thousands of pips, and then you get on it at the right time. Until then, guys, we love you. See you in the next video. God bless.